Kavakis. I'd like to welcome you to the Institute of Eastern Mediterranean Studies. And this is an event. Close to the mic. Welcome this Tuesday evening on a conversation that's been brought to you by the Institute of Eastern Mediterranean Studies and the School of Business and Management, and also the Departments of Political Science and International Studies and Department of Economics. And we have with us two old friends. I'd like to say that they're old friends. We did this in the spring semester, and we're sort of like following up this conversation, a very important conversation that's not only an issue for the Eastern Mediterranean, but it's a global issue. And it's a local issue as well. So this is where the local, the global, and the international sort of like mixed together. And it's a convergence of different forces out there as well. We're in this period of inflationary pressure for a number of different reasons. And we have a very well-versed audience here, and I'm sure we have a nice discussion on this. And we're also experiencing tremendous pressures in the financial markets right now. We're also experiencing a greater pressure than usual on food security or food insecurity, if you wish. And we're fortunate to have with us two people that are really dealing with this issue on a daily basis, on a very on the ground kind of way. So we have with us T.A. Demoulas of Market Basket and the Boulas Markets, with a great reputation in the New England area and beyond as far as delivering food for generations. And also have with us Manny Frantidakis, who is, who runs the 12-Point Management Financial and Wealth Management and Financial Center here in New England, with roots in New England as well. So here, we'll sort of like try to unfold this situation where we are since last time we came together a few months ago. I'd say probably about 6 months ago. So I'll turn the floor over to our two guests, ask them a couple of questions as we go along, and then open it up to the audience. This is more of a Q&A and a way of for us to discuss what's in our mind from people that actually deal with this on a regular basis. Welcome to both of you.
Thank you.
The floor is yours.
Thank you. Thank you very much, Professor. And thank you all for being here tonight. Thanks for having us back. I see some familiar faces, so I'll try to keep the topic conversation dynamic and change from last time we were here. My name is T.A. Demoulas. My family has a group of supermarkets that operate throughout New England. It's primarily in 4 states: Massachusetts, New Hampshire, Maine, and Rhode Island. It was started by my great-grandfather in 1917. And subsequently sold to my grandfather in 1954, and continued to grow rapidly throughout the 70s and 80s. And we operate 91 supermarkets in 4 states. And thanks very much for having us here tonight.
Hi, everyone. I'm Manny Frantidakis. I'm the co-founder and principal at 12 Points. I share TA's remarks. It's great to be back here, and thank you for having us. 12 Points was started in 2014 by myself and 2 other partners. We are a registered investment advisory firm that manages multiple different verticals in the financial services space, ranging from wealth management, family office, corporate retirement plans, foundations and endowments, corporate trustee, and then we just launched a mergers and acquisitions firm. We have clients in 38 states, and we manage just shy of $1 billion. So we kind of live and breathe in this world, and inflation has definitely been a problem. We've all felt it. The financial markets has felt it. And I do have a little bit of background as well in the food space. My family runs a food distribution company here in New England that my dad's been operating for the last 35 years. So been seeing it on that front as well.
So my first question to you then, Manny, is like, when we met last, or even a year ago, we were thinking that inflation is like this temporary,
Transitory.
Transitory. What does it look like now?
So in our opinion, inflation has peaked. We're in the process of hopefully seeing yields peaked. You just had a very beneficial CPI report that came out last week, and you had a decent PPI report this morning that came out. It was expected that we were going to print an 8.3 handle, and it came in at 8. So we are starting to see some softening in the inflation data, and we're starting to see some relief in supply lines. We're starting to potentially see some relief in food prices, but I believe most of that will come in 2023. Right now, since the start of COVID, food prices are up 65%. And since the invasion of Russia's invasion of Ukraine, food prices are up 12% since that point in time. So we're starting to get things together. I do think that we need some policy initiatives to really move the needle. But at the same time, the Federal Reserve has raised interest rates a number of times. We're sitting with a Fed funds rate somewhere around 4% right now. We're expected to hike another 50 basis points in December. 2023 is still a question mark in terms of what decisions they make, but the effects of their rate hikes are starting to be seen in the data. So just this morning, CNN's running a story that consumer credit has grown at the fastest pace in 15 years. So people are absorbing that cost, putting it on credit. You are seeing it on every front from wages to rent. You're starting to see a deceleration in home prices. So, it's hitting all areas of the economy.
Yeah. So 2023 seems like it's going to be continuing on and
I think we have to get used to a world where we're living with higher rates than we've been, in the past 12 years. So do I see a world that we go back to a CPI report where it's somewhere between 1% and 2%? Probably not. I think that's something structural has changed in the system, but we'll probably live in a world of 3 to 4%, not, 8 to 9%.
yeah. And TA, last time we met, one of the issues was the supply chain issues that you guys were facing as well. And, so has that been resolved? Has that been compounded by the issues of inflation in the financial world? I mean, what does that look like right now for you guys?
Yeah, when we spoke last spring, the primary concern amongst everybody in the grocery industry was supply, right? The variety that we once had in the store and the quality we once had in regional supermarkets was very compromised. What we've seen transpire over the past 6 months is, some people getting back into the labor force, a lot of these manufacturers and these producers being able to produce more variety and deliver the goods that we were looking for. But since we've last spoke, it's really been the cost that has been the issue. So we've seen supply, variety, different sizes of goods, new innovation on products come back into the marketplace, which was stalled out for 12 to 18 months during the COVID period. Now it's really been cost is a driving factor impacting a lot of the consumer purchases.
I know you guys are like, just this family-driven, oriented business, and so you have a better sense of like the consumer. Where's it? I mean, you hear a lot of people not being able to afford. There's an affordability gap that exists with a lot of your clients, and do you guys get a sense of that?
Yeah, I think the best way to answer that is, like Manny said, food prices from pre-pandemic levels are blended up over 50%. Some costs are up over 100%, some costs are flat, but blended, the cost of food is up significantly. And when the consumer is making their purchasing decisions, what we have seen is consumer loyalty erode a little bit, and we've seen a lot of people go to discount stores like Dollar General, Ocean State Job Lot, the Dollar Tree stores to get everyday staples, milk, bread, eggs, some packaged good products. And we've seen a lot of, market share, we call it market share leakage to Walmart, right? So Walmart came up with an earnings report today, excellent report for their Q3 earnings. And what it basically is customers perceiving different retailers as discounters, right? And they think their dollar's going to go further. And in some cases, it's true at Dollar General, Dollar Tree, or Walmart. And primarily, Walmart's focus today was on food. They said, we have captured consumers that are traditionally shopping at more higher priced retailers or supermarkets, and we brought them back into Walmart, into the food division. So to answer your question, I think food affordability is a major concern going forward, right? I mean, it's like cost of living with rent. Food is right up there with the next biggest priority amongst these consumers, and they're going to have to make decisions on where to buy their goods.
Yeah, man, you want to add?
No, I was just going to say, in that same report, Walmart came out and said that they were going to go to battle with their vendors to seek out cheaper prices. And if that meant leaving vendors behind and seeking new ones, then that was what they were going to do. So it is turning into a battlefield out there. But the good news is like, it does seem like the worst is behind us. So in October, in the CPI report, food inflation only grew by 0.4%. I know it's still growing, but that was the lowest increase since 2021.
Yeah. Because I mean, even before, we had a lot of people who were like on that bubble kind of a thing as far as like affordability of food. And you talk about going to battle with the vendors. Do you sense that there's that much of a margin of profit that you can like squeeze the vendors in a sense? Of is that where you're sensing the push would come from?
I think negotiation is leverage, and leverage is very tough amongst the food vendors, right? Because there has been so much consolidation over the years that, and you can't quote me, but you take the top 100 major brand names that you know in the store, right? Chex cereal, Velveeta cheese, Kraft mac and cheese. So many of these brands are owned by 4 or 5 companies, right? There's so much consolidation. And a lot of the privately held companies they're all private equity companies. They're all backed by private equity. So a lot of these companies that you try to negotiate and leverage against, it's difficult, right? Because there's only so much that you can do operating a store without maintaining the major brands on the shelf. And then if you try to switch vendors and go to a secondary supplier, maybe not carry the name brand, but carry a knockoff product, right? The vendor over here is probably owned by a PE company, right? And so they're watching their margins very closely and their profitability. So there can be a lot of shopping around, but it's a lot easier said than done.
Yeah. So do you see like a changing landscape on a grand scale, like going away from, challenging even that structure? Because it sounds like 4 or 5 companies globally, really run the food business throughout the world.
Yeah. I mean, I think what we're going to see is more investment in 2023 in promotional pricing, in promotional frequency, right? So deeper discounts on sales, more frequent sales, cheaper sale prices, as opposed to the everyday shelf price coming down. And some of these large companies like Kraft Heinz, General Mills, Kellogg's, they've indicated that to us is like, hey, our list price is our list price. That's not changing. Our company's already given us direction that there's no negotiation on that. But what we can go back and vouch for you for is more promotional investment and more promotional funding for 2023, right? So when we're mapping out the calendars for 2023, we're saying, okay, we used to sell this box of cereal every day for $2.99. That cost us now $3.99 every day to the consumer. But when it was $2.99, we used to promote it at $2.49. But now we're going to discount it to $1.99, right? So it's going from $3.99 down to $1.99. So for a 1 week or 2 week or 3 week period, we're going to offer a larger discount to the consumer and hopefully at more frequency. So the blended average cost to the consumer is still going to be higher than before. But I think that's the way that these companies are going to invest back in their business, because they're going to maintain their everyday margin, and they've gotten away with several price increases over the past 18, 24 months. And I just don't see it going backwards.
Yeah. Many want to switch gears a little bit, we're like a week away, after the election. So, and I'm sure, there were all kinds of predictions, as to the wave or not the wave and what that financial market looks like, So what does that look like now? Like, well, based on the expectation of where we are a week later?
Yeah, so it was expected to have a red wave. It ended up being more of like a blue dribble from across the country. But you're still going to get a congested Congress, a split Senate, which just means that less legislation is going to be passed and that federal spending will decrease over the next 1 to 2 years. The odd thing is also at the same time, usually the best economic years are in a presidency's 3rd year. So we're entering in that phase. But the market, frankly, didn't really care about the midterm elections. It already priced in gridlock, and it's exactly what it came out to. What's moving the markets right now is going to continue to be where are yields, where's the 10-year treasury, where is inflation, where is it peaking, and what is the course of the Federal Reserve. So that CPI report that was released just 2 days later had a much more magnitude on the markets than the midterm elections did.
Are there questions out there before I just don't want to pick up?
One thing on the food part of it is that we are, Morgan Stanley came out with a report recently that they're expecting an 11% drop in prices next year. So things are getting better. One of the reasons because of it is we are expecting that, tensions between Russia and Ukraine should subside, allowing for Ukraine to continue to come close to historic levels of outputs of grain, as well as fertilizers and other, products that go globally. But not only that, but because grain margins have stayed so elevated, actually farmers are reinvesting in acreage and reinvesting in their product. So you should see supply come back online sometime in 2023.
Yeah, and I should note, when I was talking about higher everyday prices and promotional frequency, I was talking about center store, right? So all packaged goods, right? Like what Manny is talking about is exactly true. A lot of the commodity-based milk, cheese, eggs, meat, grain has remained extremely high, and there is projections for that to have some softening in 2023. But I was talking about core center store, shelf-stable goods.
Any questions?
So when you look at just comparing those two elements, when people go to the store and you have the primary needs and secondary needs. So if your primary needs are your milks, your eggs, who knows if it's cheese or not, right? And then it's those other things that they'll get while they're there, right? So I think if the prices come down for milk, eggs, and those basics, I think people aren't gonna go and then shop someplace else. Once you get in them for those core elements, they'll just shop around the edges then to fill up their cereals. And quite frankly, that's where the promotional items drag them back to the store. Because ultimately people, if it's not the wallet, it's convenience. So once you get them in, the likelihood of them, buying 5 things here and then buying 10 things something else is remote. I think gas is another big thing, right? Because one of the bigger costs in food is shipping costs, right? So it's the trucking, it's everything tied to kind of the energy side. And I don't know when that moderates or if it does.
Well, when we were back here in the spring, we were talking about how shipping costs were up near like 20,000, right? The good news is those
Per container.
per container, which has drastically dropped back to normalcy where we're looking at around 25 to 2,800 a container. So that is, benefiting consumers as well as, substantial drop in energy prices. Look, oil's not at 60, it's around $86 a barrel, but it's not at 100 or projections of 150 like we were about 6 months ago. And, gasoline just a few weeks ago was back to 250. So it is benefiting. It just takes a while for supply to catch back on. It's not, the Federal Reserve has really one or two tools, and that's raising interest rates and lowering interest rates and, some level of fiscal policy alongside that. But they can't just flip a light switch and get supply back online.
Diane and then Professor.
How has the cost of labor and also the labor shortage impacted the price of goods at, let's say, a supermarket? Like, does that have a lot to do with like the supply chain issues and just like the rising cost of things on our shelves?
I think the short answer to that is absolutely yes. And I think the best way to look at it is go back to the origin and go back to the source, right? So we're having labor issues out in the fields, right, in agriculture or in the facilities. These manufacturers and producers are going to have to compensate for that, right? So they're either bringing in temporary workers, they're raising wages, they're giving out bonuses to try to put the same amount of goods out. And then once it leaves their facility, right, now we have to source some sort of transportation, right? Whether that's by truck or by boat or by train or by plane, right? Anything. If there's a shortage on the transportation side, right, they're outsourcing to get more labor into their pipeline, right? So theoretically, they're paying higher wages to their truckers, right? And it comes to us if we're having a shortage in our warehouse, right? We're trying to source labor, and the best way to do that is incentivize them to come in to work, right? So pay higher goods, and you just trickle effect that down the line. By the time that product gets to the shelf, it could cost 10, 20, 30% more than it used to, all because of the cost of labor. And it still remains a serious issue, right? All across every industry in the US, Manny can probably speak to it a little more detailed than I, but in the transportation and grocery sector, the labor shortage and the increased wages for labor are directly affecting the prices.
Yeah, labor is part of the stickiest part of inflation. Labor never reverses course. It's not like we hit better economic times and wages go back down. Once they're there, they're usually set. And you're actually your people that are switching jobs are actually benefiting. Labor right now, if you're in the same position, has increased about 5.9%, but for those that are switching jobs, it's closer to 7%. And you're still sitting with 10.3 million jobs of surplus in this economy. So as much as people talk about recessionary fears and layoffs and whatnot, right now, even just in the Bureau of Labor Statistics, 40% of the population that have a household income of 50 to 100,000 had a 55, they had big fear of them losing their jobs. But at the same time, 45% said that they didn't have concern about finding another job. So that also makes the job of the Federal Reserve that much more difficult as they're trying to pull steam out of the economy and hope that the unemployment rate rises.
Yeah, and we saw the layoffs of Elon Musk
Yeah.
inspired layoffs, they did Meta and now like Amazon, I guess, announcing like 10,000 layoffs. So this, it's a trend that's there. So,
Yeah, I guess I had a question, I guess one question for each of you, thinking about how commodities, these commodity crops are traded, right? And I was just kind of curious to see what you're seeing in the market. You're saying they're coming down. Is that because of the way the trading is going? But also thinking about, we talk a lot about, the Ukraine war and how that's impacted some of the growing seasons, but obviously climate change has greatly affected how we grow things and where we grow it. So I was just wondering what you're seeing there as far as what these commodity crops and how they're traded. And also for TA thinking about, I was wondering, because a lot of things we talk about, we see like, the reports about how all these companies have greatly inflated, not just food companies, not talking about food companies, but like, well, Coca-Cola, some of these companies greatly inflated their costs above inflation, right? And we see these record profits. And so you're in competition with like Walmart, for example, which can do that, but in certain respects, they're renegotiating. So I was curious to see what your process is at the store. If some of these core prices are a little high, what do you think about lowering? We think about like this loss lending, right? Where you lower prices on other aspects in the store to offset that. And I'm wondering how that goes within the company itself.
Yeah, so in the future side, right? So commodity futures on all contracts are priced in months for any number of years out. So right now you're actually seeing an 11% discrepancy between December of 2022 and December of 2023 prices, whether it's in corn, soybeans, wheat, et cetera. So that is getting priced in. And part of that could be because people expect that tensions will subside. And part of that could be because people have seen the investment in farmland. For example, like, earlier this year, there were stories of Bill Gates and Warren Buffett investing heavily in US farmland, as well as even China investing pretty heavily in US farmland. So I think it's stories like that that allow prices to come down slightly, but it only takes one little event for things to reverse course. There was a flight to safety today in the markets because 2 individuals were killed in Poland due to unclear what it was, but either a part of a missile that was intended for Ukraine diverted off course or it was purposely launched. But things like that could really throw a wrench into the engine of where prices go.
Yeah, to answer your question, so in terms of how we look at our business, right? I guess from a top line, we look at your total blended margin, right, across every item in the store, right? So there's certain items that we need to remain competitive with, like take milk, for example, right? For every type of milk, skim 1%, 2% whole, right now we sell it for $2.59. Whole milk right now, I think costs around $3.70 a gallon, right? So because Walmart's there, because Aldi's there, because Trader Joe's are all selling it between $2.59 and $2.99, right? It's to remain competitive with your core competition. So you can say that about a few items like eggs. A lot of the red meat right now is very expensive, but we're selling it at cost, right? So when we look at it, we see, okay, we take our total blended margin, and as long as you're managing your total blended margin across the entire portfolio, you can pick and choose, hey, what can we raise our price on a little bit, and what can we start to use as a loss leader to give away? And the most important things to look at are the everyday staples like we talked about. Those are also the highest volume items, so you expose yourself to higher losses or higher gains when you discount those items or raise them up. But getting back to your question about leverage with the manufacturers, pretty much exactly what you said is what we try to do, right? We look at some of the best competitors in the regional grocery chains or the mass chains. So it's like Walmart, Kroger, Publix, right? We'll get price surveys from them, and everything's available online now. So all the data is out there. So we'll tell you what the average price point is out in the marketplace. So, take Nestle morsels, right? Chocolate chips, everyone's selling for the baking season. We will see that the average selling price out in the marketplace is $3.29. Our costs might be $3, right? So we use that information to go back to Nestle and say, hey, how come we're only making 30 cents on $3 here, right? We're only working on 10 or 12% margin. This is not adequate. How is Walmart selling it at $3.18, and how is Aldi selling it at, $3.16, cheaper than we are, and we're not even making our adequate margin. Right, so we really use the competition and look at their shelf price and what they're selling it for and what their promotional sales are for. And kind of like syndicate that data and then go back to a manufacturer and say, hey, here are the 24 items that you sell to us. Here's where we're competitive and here's where we're not competitive. And how can we work the cost backwards to try to maintain our margin and be properly positioned in the marketplace.
So you hiring a lot of data analysts now to help you do data mining and kind of crunch those numbers?
Well, the good thing is like with Nielsen and IRI data, a lot of it is already
Out there.
put into formats for us, right? So if you're a buyer at our company, you can pull these reports off a platform basically. And so Nielsen and IRI pay retailers to supply them with our data, our scan data, our cost information, our volume on different things. They put it into all of our requested formats. So it's very easy if you can manipulate, you're very computer literate, you can manipulate these spreadsheets pretty easily. It's easy to tell where you're on track and where you're off track. But yeah, to answer your question, there is some analysts in the office doing some data mining work. But most of it is available. So it's not that they're not pulling crazy data from all over. It's mostly formatted by IRI and Nielsen.
Yeah, is there a follow-up?
Yeah, I just want to follow, because I was thinking about it in relation to costs and so with like food that's past the date, right? And how do you factor, because I imagine that in times like if demand goes down for certain things, you might take an initial hit on that because you got to lay that cost out. And how does that work? Thinking about, because some of these dates too, some of these dates are arbitrary, but you don't have control over that. So
You're talking the expiration date.
yeah,
Yes.
yeah. And so how do you figure that? I know there's certain programs out there trying to promote donation of some of these goods. And I don't know if that helps financially in any way. It helps maybe people push off food insecurity, right? But for a company that's trying to, in a tough marketplace, I'm wondering how that.
So there's two answers to that. So shelf stable goods, so anything that has like a 12-month code. Before we receive it at our warehouse, if anything comes into our warehouse with less than an 8-month code or a 6-month code, it gets refused. So we won't even take possession of it if it's too short coded. That's never really the issue, right? We're talking perimeter. So the perimeter of the store are all your perishables. So primarily the buyer is responsible for basically projecting store throughput, right? So the buyer is buying all the goods to a central distribution center. And he's calculating, okay, here's every single store that we have. Here's what they're estimated to sell for escarole, romaine lettuce, beets, eggs, right? So they're doing all of those projections. And, if they're good at it, what they bring into the central warehouse and then what gets sent out to the stores, they should be pretty on the money. Now, there's always shrink factored in. You try to minimize it as much as possible. All of our expired meat renderings, milk, eggs, they go into anything that's expired, off quality, moldy, whatever it is, goes into barrels at store level. These barrels get picked up and they go to pig farms for pig feed. And it's basically a cost neutral, right? They come and they pick up the barrels and they haul them away to the farm to feed the pigs for no cost. So that's how we get rid of the majority of our renderings.
Devin and then Matt.
Thank you for coming. And this is also Denise Lewis. Going back to that question of labor, kind of like on the ground in the stores, at least where I'm from, Market Basket kind of has a reputation of taking care of employees. And a lot of the people that shop there because of that. Well, also it's affordable, but because of this reputation of taking care of employees. So during times of hardship, when a lot of companies are sort of cutting back on employee benefits, on employee treatment, how do you sort of navigate, staying competitive and maintaining your reputation? And on that, have you seen any flow from other stores into your store as far as employees, just because of the better treatment?
Yeah, thank you for the question. It's a great question. And, we have to give credit to my grandfather who sort of started the structure of the profit sharing plan, which is what Market Basket is well known for, where the company shares a certain amount of its profits with its employees every single year into a 401k type plan. We're extremely lucky to have the loyalty and dedication that our associates have to Market Basket. Obviously, we need to stay competitive on everyday wages, right? Salaries and hourly wages. We need to stay competitive with the bonus program. We need to stay competitive with the health and benefits program, and we need to stay competitive with the 401k program, right? So those are kind of like the four major buckets of our compensation plan. Full-time employees, right, have access to all of those things, all those four buckets, right? Quarterly bonuses, everyday hourly compensation or salary, health and benefits, and 401k. About 75% of our store staff is part-time, right? So they're working on a part-time hourly wage, which is very competitive amongst other like retailers. So I think where we attract a lot of employees from other stores or other industries is to our full-time program, right? Where it's more inclusive, right? It's more comprehensive. People that are career-minded and career-focused and see themselves staying with Market Basket for several years or decades, right, can really benefit from the full-time compensation package that is in place. And I think that is probably the area where we've struggled the most over the past few years, is trying to recruit and retain that full-time core. We've had good success part-time, right? Because the majority of our part-time employees and associates work at the front end doing cashier and bagging and retrieving carriages in the parking lot. And most of those employees are ages 14 to 25, right? So we've had good success sourcing some of these younger people to work part-time, to work 12 hours a week, to work 20 hours a week, to work 30 hours a week. In the front of the store, I think where we're seeing challenges recruiting from other industries and from other retailers is to pitch the idea of, hey, to benefit the most from Market Basket, want to become an associate in this full-time role, you look over the course of 12 years, 18 years to 20 years. Right? So I hope that answered your question. So that's good.
I mean, employment is a big issue, so like, maybe like you see this kind of a model like in other industries, kind of, because we're dealing with like employment and lack of workers and lack of incentives, and it's like you gave us the statistics earlier. What do you see like in a wider industry kind of a thing as far as employment is concerned?
Yeah, so attraction and retention of key talent has become extremely difficult. So we run about 130 corporate plans across the country, including multiple different institutions. And it really depends on what you're willing to offer. So I was actually just with a good friend who's a managing partner of a law firm who lost 2 5-year associates to a competing firm. And it's the third or fourth time it's happened in the last 2 years. And they're trying to get creative. And there's different mechanisms to put in place, TA reference profit sharing and being able to give a portion of that to your employees to keep them. And with profit share, 401k and match, that goes immediately vested. But for other vehicles, you can add a vesting schedule that, goes up to 6 years and it's graded vested. So you at least keep people for a portion of time, but it's become very difficult right now.
Natalie, then Larry, then.
I have a question. One is like for investing, and then one's for like the supermarket. So going back to like the expired food or like close to the date, like when the food is about to expire. Like I know in the UK, what they do is like they have a separate section that's for like food that's about to expire, but not as expired. And it's like discounted at 75-80% because it's going to go bad. So it's not going to bring in any profit, but at the same time, like the customer can have like an affordable price. Is that something like your supermarket has considered doing? Because I know like in the fruits and vegetables section, I've seen that at the Market Basket, which is like something unique in Massachusetts. I think I've seen it only at your supermarket. And also the investment question is like related to like the recession. Like a lot of people are like panic selling their stocks right now because it's going down, obviously because of the recession. And a lot of people are like scared to invest anything. If anything, they're trying to hold on to like cash savings. Do you think that's like a mistake because like eventually the stock will go back up? Or like in relation to that is like a lot of like young people like are like investing in crypto now because crypto is also going down and then it's gonna spike up later. So like kind of like in relation to recession, like a lot of things are happening. So I was wondering like what's your feel of it?
Yeah, so you hit the June lows and the market has actually bounced back quite a bit, especially in the last week or two. So if anyone that panic sold, one of the things that we do is half the job is we play psychologists. And it's telling people not to emotionally react to certain markets. What we know to be true about markets is over time, the volatility could be this on a day-to-day basis. But if you look at it from historical averages, it's been nothing really but a straight line. So especially people in your generation, what we tell people to do, especially in retirement accounts, is, you know, put as much money as you can and kind of set and forget about it. But this was a tumultuous year where it was the first time ever where you had a correction in the stock market and a correction in the bond market, which amplified the magnitude of pain. So you had people that, you know, acted emotionally, but from our perspective, you know, the sky wasn't falling. It was a sentiment read. So we were pounding the table back in December 2021 that said that the market was over its skis, that these companies had grown to insane valuations that they, you know, really couldn't meet. So it's really been a valuation reset. We haven't truly felt the effects of the recession yet. We're expecting that in the first quarter of 2023, which will report on the earnings of the fourth quarter of 2022 to be somewhat dire. But at the same time, we do see the Federal Reserve switching gears. And not to say that they're going to pause or pivot yet, but I think we're closer to the end of the beginning. And the second that they reverse course and drop base, you know, they cut rates by 50 basis points, the markets will take off. And I think that, you know, we're setting up for a somewhat decent halfway through 2023 and pretty good 2024 in terms of recovery. And in terms of crypto, I mean, obviously everyone's paying attention to what happened with FTX in the last couple of days. You know, it's still such a new investment. Not a lot of institutions have been able to really touch it yet. It really depends on what you believe. If you believe in decentralized finance, I believe in the technology. I think that blockchain will be here to stay and will be used in multiple different industries. I just don't have an opinion on a token.
Getting back to your question about discounting goods and unexpired goods. So we do a lot of that. Anything that's off quality, right? We at the store's discretion to put an appropriate price on it and try to salvage any costs incurred, right? So if they reduce it by, I think we go 33% and then 66% and then throw it away after that, right? So there is steep discounting. And it's at the discretion of the store. You see a lot more produce because produce is bound to get bumps and bruises and a little decay on it, more so than something in the dairy department where it's packaged goods and it just expires and goes out of code. But to answer your question, it's done in most departments in the store and usually in a separate section.
Yeah, did Amazon buying Whole Foods change the competitive landscape for you at all in terms of like price gap or grocery delivery?
So when Amazon bought Whole Foods, it injected a lot of technology into their stores, right? And I think they put a big emphasis on delivery and pickup when they did that, right? Because they had the platform to do it. Whole Foods is an extremely well-run chain, right? They're great at what they do. They're great merchandising. They have beautiful stores, and I think they continue to do that. I think they put such an emphasis on delivery and pickup, and it's not a profitable part of their business, right? Because it's very cost intensive to deliver goods, especially perishable goods and frozen goods, right? You don't make money delivering it. I think they put a big emphasis on that, and I think they're trying to pivot a little bit away from it to try to figure out their profitability. But we compete in Massachusetts pretty heavily with Whole Foods. In New Hampshire, there's only two or three Whole Foods. I believe it's one Nashua and one in Portsmouth. I think that's it. So there's only two Whole Foods in the New Hampshire market where we have 36 stores. So they're not a direct competitor really in Maine, New Hampshire, Rhode Island. It's more so in Massachusetts. But they're going to be formidable. They're going to be here for a long time. And, you know, they run a great operation. They're a little bit more higher priced than we are, which attracts a different consumer. But there's a lot of crossover in the store of products that we carry. So to answer your question, you know, did it have a direct impact? No, but I think it probably stole some customers and market share from us on customers looking for easy convenience. You know, they're utilizing Amazon, they're utilizing Prime. All of a sudden now they're buying their groceries from a very high quality operator, basically through what they were doing, buying non-food goods on Amazon previously.
Yes.
Yeah, Telemachus, good evening. Well, many stores start having deliveries now, Stop and Shop, and so you can call and you go pick up your groceries. Are you planning to do something like this in the future? One, two. I read that Walgreens and CVS closed some stores in West Coast because of shrinking inventory. They say it was non-profitable for them. And in order to protect the inventory in other stores, they move them behind plexiglasses, so it looks like vending machines. Have you noticed something like this in your stores in some areas? And are you planning to do something about that? The third one, do managers in each store has the ability to choose which product to supply? Because in some stores, I find something that I don't find in others. And the third one, something that is more fresh than others. So how do the managers decide what they're going to offer? So I had to go around and shop in different stores, so just happens.
All right, so let me take your third question first. So really, all stores, if they have the space, no matter where the market basket is located, should be trying to carry all products that we offer out of our warehouse. With that being said, we have some stores that don't have the space, right? If you look at the store in Somerville, which is a third of the size of our store that's in East Boston and Chelsea, right? They're gonna have difficulty fitting a lot of the items in that store that Chelsea has. Also, our products cater to the areas that we operate in. So if you go to Fall River or New Bedford, where there's a large Portuguese and Brazilian population, we might have more products that cater to that ethnic clientele. Versus if you go to a store in Lowell, where there's a big Greek and French population, right? We might have some more items that cater to those type of ethnicities. With that being said, if there's ever an item that you find in a store that you can't find in a different store, you can inquire about it with the manager, and he should be able to source it for you. Yeah. Getting back to your question about CVS and Walgreens, we are co-tenanted with them in a lot of our centers. We have had them close a couple locations. I think what their hard inventory is not as profitable as their prescription business, right? In other healthcare businesses that they're getting involved in. So they have an offset. They can mitigate with whatever they don't sell for hard inventory, which is really just a convenience that they offer for their prescription and walk-in and healthcare business. That's why they're exiting, right? Because they're paying high rents in a lot of these locations. And the physical inventory is either not turning over or is really not a large portion of their overall store volume because of the prescription business. Is that your question, or were you talking more about?
No, they specifically say that they're closing the stores because of shrinking inventory.
Yeah.
And the people, somehow go there and
Yeah.
take things and walk away.
Yeah, that, yeah, I thought that was the second part of your question there, where, yeah, they have a planogram of the store that's a plastic glass with all the pictures of the products that they offer, but they're not actually physically there. So some chains are more susceptible to theft than others, but there's been major theft issues at our stores, major theft issues at Home Depot, Walgreens, CVS.
Is that something you've seen recently?
Oh, yeah, we have major shoplifting issues.
Really?
Yeah, it's been around for a long time. I think with the advance of technology, we have a lot more visibility to it now, where before we relied on boots on the ground and we knew it wasn't realistic to have loss prevention people at each location. But now that we kind of do it from a centralized location with a lot of TV screens, yeah, we've had a lot of issues with theft. The majority of the theft is internal, which is not different than any other industry, right? The majority of the theft is internal, and a lot of it is done with reusable bags, right? So a lot of people bring reusable bags or purchase reusable bags in the store, so it's very hard to differentiate what product is actually purchased versus what was brought in through the front door versus what was taken in the store and taken back out of the store.
Well,
Yeah. So, did you have one more question, or?
The
Yeah,
first one
excuse
was,
me.
are you going to plan a delivery call in orders and pick up
Oh,
from the
yes,
store?
yes, so we have explored it before. We don't have any internal infrastructure to take care of pickup or delivery orders right now, but we do partner with third parties So we do have the Instacarts and the Uber Eats and the Grubhub. Those delivery services, if you go on their app, you can order and request to have your food shop done at Market Basket. But right now, there's no immediate plans to have our own internal delivery system or our own to-go curbside pickup system.
Bella?
So I think you touched a little bit about this on your last response, but I know we've been talking about a lot of global issues in terms of labor shortages and inflation, but it's also important to look at the local conditions in the neighborhoods in which you operate. So I have a specific question about your Union Square location in Somerville, which is where I live. So obviously we're dealing with different global issues, labor shortages, inflation, but then there's also a lot of change happening in Union Square, as I'm sure you know, with the redevelopment and the resultant displacement. So I'd like to know how the changing conditions in Somerville, in tandem with these more global issues, are impacting your business, as well as what is your relationship with the current developers in the Union Square area, and how does that impact your business as well?
Great question. I mean, funny story about the Somerville location. I believe, if I got it correctly from my father, back in the 70s, that was an AMT store. It was such a tough area, right? So much theft and so all the other nonsense that went along with it. AMP basically came to Market Basket and gave us the keys and says, we don't want to operate the store here anymore. Take the store from us. So it was such a tough area. It sat there for a long time. We didn't want to operate the store there. Right. So, and eventually we did. And what a cultural transition that city has seen over the past 20 or so years. The labor shortages are more drastic in certain areas than others. We do not have labor issues in densely populated areas, especially areas that have a large influx of immigrants. Right, so if you take that whole belt of Salem, Mass, Salem, Lynn, Revere, Chelsea, Somerville, and then you go down to Brockton, Fall River, New Bedford, right? So you have a lot of these gateway cities that have a lot of immigrants, whether they're coming from Eastern Europe, they're coming from Central America, they're coming from South America, and they have tremendous work ethic and they love working for Market Basket, and we're happy to have them as associates. So a lot of these areas that are densely populated, we don't have a lot of labor shortages. Now, with that being said, you take a city like Somerville that's being gentrified. We have not seen any loss of labor in that store, but what we've seen is basically a change in dynamic of consumer behavior, right? So where a lot of the product offerings has changed inside of the store to more specialty foods, more higher end goods, more organic goods, right? More non-GMO goods upon the request of the consumer, because it just shows you the clientele from Cambridge, Somerville, Arlington that has pushed into that area over the past 20 or 30 years has changed drastically from what it was a long time.
How does that affect the global markets, Manny? Like the whole urbanization and the whole gentrification it's taking place everywhere. Like, what does that do to the financial world as we're moving like in this sort of like, two-tier world, like you have like this, what TA just described in like, in our area, and how do we sort of like project that in a global financial?
Yeah, I mean, globally, it's hard to speak of, but here, I mean, when you look at gentrification, it's mostly, you see a massive increase in property values over time. And then you see a massive discrepancy between income and quality, between people that had been there for, 20, 30 years and people that, are just moving into a new condo that was developed. So you're seeing discrepancies.
Yeah, it's happening everywhere. Like it's happening even like in Greece right now.
And I think it's voiced more in politics than, in financial markets.
Yeah. And, it's, I mean, even your ability to move capital in the way that, with all the golden visas and all the visas that are available, it's just changing the shape of a lot of the urban areas throughout. And I'm sure that's having some kind of like a financial effect, some kind of an economic effect.
Well, I think the biggest issue is the lack of immigration, like getting a 12B1 visa to come here and have a permanent job has become near impossible unless you are a scientist or Google wants you or Amazon wants you. For lower level mid-market companies that are trying to bring in international talent, it's become incredibly difficult.
Yeah.
And I think that has a profound effect.
Yeah. Just like even looking out here, people who know this area, this is a completely transformed area, and a lot of it has to do not necessarily what's happening locally, but the financial, the money that's being moved around internationally in areas like Boston or places that are sort of have the attraction to really absorb and develop in different ways.
Well, the
right?
rule of thumb is usually capital always goes where it's treated best. And right now in the United States, you have positive yields where it hasn't existed in a long time. So you're actually seeing international money flow here, you know, picking up steam since the 2018 gap.
But it's also interesting because you're also seeing it within the United States. It's going where it's treated best. So you're seeing a migration down to Texas, down to Florida, right? So in a sense, what we're gonna see potentially, right, is a hollowing out of these same cities that have just been rebuilt because they're gonna track where capital is treated best. And with the emergence of the remote worker, what you've got is highly skilled people who can work anywhere and they choose to work someplace else. It's not where they were necessarily educated, but it's where they're gonna have a combination of lifestyle, you know, better taxes and the freedom to work the way they want to work. And it'll be interesting because Connecticut just went through that about 15 years ago. It was the hollowing out of Connecticut after some tax law changes, after some, you know, kind of revitalization of urban areas. And then you found whole companies and whole industries just relocated out. Massachusetts was a beneficiary of it in some ways, but Florida is a huge
Oh,
beneficiary.
absolutely. And now that we just passed the tax
Right.
code change, I mean, you're already talking about, you know, money fleeing the state.
And I think the HB1 visa issue is a big issue because smaller companies, it's so complex that you almost get to the point where it's not worth it for you to bring one or two people over because the time and the energy and then the regulations around it. And it's too bad because it's great workers that you won't get because all the things you have to do to post your jobs internally to people that you know don't exist. And but you have to do it for 6 months or 12 months or show that you offer the job to a bunch of other people. And the reality is I wouldn't have gone to Europe or to Asia to hire the person if I had the people internally.
Correct.
But nobody wants to work here. They want to work out of Florida. They want to work out of Texas. It's an interesting time
Yeah.
for us.
So I saw Devin first, but I saw Professor Silver, like his hand jumped up like.
Yeah, I was gonna say we should go to.
To this, so I'm gonna yield, I'm going to Adam the floor.
I mean, but I think it's an interesting point, right? You know, but where capital goes, but people also want to live in good areas. Like, so these companies may go somewhere initially, but you know, people who staff these companies, maybe the remote worker, we're seeing that, but I think, I'm wondering if they're gonna see a transition back into people being in the office, and people want good schools, they want entertainment, they want culture around them, right? And so you wonder, like right now, maybe they're going to Texas and Florida, but you wonder as some of these laws or effects take longer effect, if that's gonna be the case. And I'm from New York, and I'm from the New York City area, and we've been talking for years, like, you know, if the business, you know, people are gonna go, like, companies are gonna move to New Jersey, if New York does this or that. It never happens, right? So, you know, maybe some people live in Hoboken, right? But, you know, good for them, right? You know, like, but I mean, I just think that some of these things don't really come to pass. I mean, and I think, you know, I don't know, I just think that you're right, capital goes where it's more favorable to them, but also they want people also want to live in an area that speaks to them. So, I don't know.
Kind of jumping off everything that we've been talking about. This, like you mentioned, this sort of two-level society in this issue of gentrification. You're kind of seeing it in two ways, where you have these up-and-coming neighborhoods that still have existing populations. So there's this in-between where you have these new condos full of people with a lot of money, and then you have the old apartment buildings that have, you know, people who are losing money rapidly. And how do you sort of manage this both from like a wealth management standpoint, but also like a grocery store, like trying to, like you said, having those organics while also like you need to maybe stock more milk, bread, like essential items that are affordable. And like how have you been able to manage that, trying to play both sides?
Yeah, it's tough. I mean, it's usually, you know, the pendulum swings crazy one way and then swings crazy the other way. So like a perfect example is, you know, between 2015 and locally here, 2015 and above, like Chelsea saw massive development. And now they want no more development. And you're starting to see the same thing in East Boston. So you went through years of development and then the community puts their foot down and says like, no more, we don't even recognize our neighborhood anymore. And then all of a sudden development completely stops. And then that capital has to go find somewhere else to be productive. So it's hard to manage. And it's mostly controlled by political ties.
Yeah, I mean, investment in, especially these gateway cities, right, which are sometimes more the depressed areas. I don't think is anything new. I think it's been with the population growth, in the greater Boston area in the past 15 or 20 years, right? It's been exacerbated. But I think this flow of, longtime residents in certain communities and then new capital investment coming in, younger generations moving in and then pushing these people out, right? It's sort of like a cycle that keeps on rolling. But the best answer to your question, we try to cater to everybody in our stores, right? Young, old, wealthy, or whatever it may be. We try to, not quite everything to everybody, but we think we have a wider variety and a larger products than most supermarkets. So that's how we handle that.
And it seems like the Union Square example is the good example. of
Yeah.
that, right? Like this transition that Bella, and I'm not surprised that Bella asked a question about Somerville. To Bella, Somerville is the beginning and the end of the global.
That's why there was an article that someone wrote in the Boston Globe 4 or 5 years ago about the Somerville Market Basket. And they said the best thing about the Somerville Market Basket is when you go in there, you hear 15 different languages being spoken. Like you go in, whether it's employees, customers, vendors, service people in the store, they're like, you can go in there, you hear 15 different languages being spoken.
7 a.m. I was there and I heard that. I just have a follow-up
Come on,
actually.
7 a.m.
Yeah, no, Midati, 7 a.m. on Saturday. But anyway, so, but I just had a question and maybe for the financial, aspect of it, maybe some other folks here. Is with the remote working, it just struck me with this idea of remote working. I always think about the small businesses in the area that thrive on workers being in a workplace, like the larger corporation. And when we have more remote workers, that obviously impacts like the small lunch place, whatever it is, because some of these, business areas are not residential, right? So I was curious to know how that impacts what you do, if anything, or if you're seeing that effect in some of the markets and stuff.
Oh, absolutely. So like the most pronounced example is that restaurateurs had to become creative and figure out how could they, keep their margin intact. So a lot of them during COVID and with remote work, existing and people no longer coming to Boston as their home office, they shut down lunch menus and they shut down maybe 2 nights out of the week. And that way they only have to hire one chef and run one shift versus having 3 or 4 of them on staff at any given time to lower payroll costs. So people do adapt and change the times. When does it come back? I don't know. I don't know if it ever does. The other thing that, I'm hearing from, managers is that, yes, remote work is working. People are efficient, but they're losing that mentorship. So for that second-year associate that can't be with a senior law partner, they're almost calling it like a lost generation of people because they refuse to come back. They're not getting the mentorship. They don't have the ability to jump into your office and ask you a question or watch you lead a meeting. And, how does that retroactively correct itself?
So much of it's on the informal basis, yeah.
Yes,
I worked in the retail sphere for a few years since I was in high school. And post COVID, I've definitely noticed a shift in that particular sphere of just like goods becoming shifted more towards athleisure, just more towards casual wear, just like just different shifts. Have there been any shifts like post COVID specifically in the food sector?
There has been rapid change in the food sector over the past 10 years. And that is what I touched on a little bit earlier, is a tremendous move to organic and non-GMO and like sustainably sourced goods, right? So there's certain vendors and suppliers that we use for these specialty foods. And their business has grown in dollars and in units tremendously over the past decade, right? But I think a lot of it has to do with the education of the consumer, right? And we see this so-called educated consumer on both coasts of the US, right? It's really like the Northeast and the Mid-Atlantic, and it's California, right? So that's where premium food items, organic food items, higher priced food items are most prevalent. And it always starts on the 2 coasts and it works its way to the center of the country. But over the past 10 years, these educated consumers have learned where their food is coming from, what they're putting in their body, what benefits their lifestyle the most, what benefits their health the most, right? And so I think just with the advent of easier access to information or social media, the nutritional information behind the food has played a huge role in what customers are purchasing.
Has that, since COVID, with like increasing prices, had that trend shifted, since the recession, like after
has.
the pandemic?
It has. So I looked this morning, actually. So our specialty food portfolio within our stores over the past rolling 52 weeks is actually down 4% in units, right? So we've seen this massive swing, basically call it that 4% in sales, call it roughly 4% sales, right? So it's down. We saw this massive upswing, right? From 08 until now, there's been massive growth in specialty food. Pandemic hit, it basically J-curve straight up. And now over the rolling 52 weeks, there's a little tail off, but I think most of it has to do with price, right? Like a lot of these prices, a lot of these goods that were premium priced to begin with, some have gone up 10%, some have gone up 110%. A lot of that has been passed on to the consumer.
So one last thing, I said, one last question. Why don't we just have the questions and then we just. Yes, and
Sure, it was just to go off of that buying trend. So how involved is the buyer in verifying that those sustainable source things are sustainable or they are non-GMO? Because your vendor could make a claim that maybe isn't true.
Yeah, I think the buyer is relying on the vendor. However, there is good regulatory and certification processes in place by the government to make sure that any stamp that they put on their product or any certification they put on their product somehow meets the qualifications of what the government's specifications are. So it would really be, hey, we rely on the vendor that the information you're giving us is true, but it would be hard pressed to think that they would basically be defiant to the FDA.
Right, regulators.
Kevin, was your hand up?
Yeah, just kind of bouncing off that last question really quick. How much of those like, not food trends, but sort of trendy foods, like is organics, like the example of avocados, where like they catch on, they, expand rapidly. They start using all this land to grow avocados and then let's say a recession happens and people just can't afford them. Do you see those prices dip or, do you just have an excess of avocados?
Right. So like an agriculture off like that, if there's ever a dip in demand and there's a glut on products or a imperishable product, the price will drop drastically to try to fire sell the goods, right? And they really have to wait till a whole nother growing season, so like 6 months until they can rearrange their crop acreage to be appropriately adequate for the demand that they have. I think you see more volatility in brands, like the one I always think of is Halo Top ice cream. I don't know if you guys remember that. I mean, it was the somewhat sugar-free ice cream that came on the scene 6 or 7 years ago. Basically, couldn't even get it, couldn't even keep it in stock, and within 3 months' time, there were 6 other knockoffs of it. And then there was a dairy-free, sugar-free one, and then there's one with oat milk, and then there's one, right? So it gets diluted very quickly, and those fads come and go extremely quick.
Did you have a lot of Halo Top just sitting around now?
Not anymore.
Well, I just want to, because you guys are going to be back in 5 months for the.
Perfect.
Yeah. I'm locking in the dates. So like, 6 months ago, when you guys were here, we were talking about supply chain issues. We were talking about transitory inflation. I know, like, Manny says, we don't know what that news story coming across meant and how that changes everything. What are we talking about 5 months from now? Are we like, I know we're not going back to normal. I mean, I don't believe like in going back to normal ideas. I think we're moving forward. So what does that look like in the age of inflation? What does food finance look in the age of inflation of 2023?
I'm gonna make a bold prediction and say in 6 months, we won't really be talking about inflation that much anymore. We'll be talking about a slowdown in the economy. We'll be talking about an uptick in unemployment, and we'll be looking for the Federal Reserve to start cutting rates.
Yeah, I mean, that's interesting. I mean, I'd be more interested to hear what Manny's perspective is, right? Because when we talked 4 or 5 months ago, right, there was this big anticipation of recession and supply chain and inflation just starting to creep up. And now we're here, we seem like we're talking about the same thing. Well, inflation is up, but the economy is still good. The markets are still performing pretty well. Earnings reports are good, right? So, and then what are we gonna be talking about in 5 months? I mean, the transition from 5 months ago to now, like I said earlier, is that, stores are well stocked and they're back in supply. The labor and inflation and prices continue to be an issue, right? So labor and prices continue to be an issue. And the only way that softens, I think, is probably some recessionary pressure to bring employment back, bring unemployment higher and to bring people back out to the workforce.
Mhm.
Right? And that will have the same relationship on inflation as well.
So I'll see you all tax day, April 15th. Just 5 months from today. We really got an education this evening. Thank you to both TA and Manny for coming back and really educating all of us on food and finance in the world of inflation. Thank you. Colleagues, Anne-Marie Pasquale of Lake School of Business and Management, and Professor Silver from Political Science International Studies for being here and sponsoring this. So thank you all. Refreshments in the back, Political Science Department and Economics Department that could really outspend themselves to do this.
Yeah, great to see you too. Yeah, thanks for coming. Yeah, no, it's good. Sure. How are you doing? Yeah. Oh, yeah.
I know, I was like, girl, I hope it's like bad. I'm